my YouTube broadcast. Today is June 25th, 2025. I'm going to go through my summary of the market, stock and bond markets, and I'm going to start with my dashboards. The first one are the four primary U.S. indexes, two foreign indexes, and the long-term government bond. So this chart shows those ranked from top to bottom in performance year to date. That is the pink box just to the right of center. So the two primary, the best performers by far are the foreign markets, the developed markets and the underdeveloped markets. And then you drop down to a couple of U.S. markets, and then it goes negative. So to the right of, the pink box, you can see the red dots or green dots. Red dot means it is below its 20-day moving average. Green means it's above. So most of them are above their 20-day moving average. There are 28 possible slots, and 20 of them are green, meaning 8 are negative. This is as of last Friday, June 20th. You can see in the yellow box, this is last week. Last week, everything was negative. Some were quite negative. So the most negative were the developed markets and the emerging markets, and then followed by the Dow. But they were all negative. So this next chart, dashboard, is a read on the 11 sectors in the U.S. economy. Based on the yellow box, all of them were negative last week except for one, and it was quite positive, and that was energy. No surprise. The red box, pink box, is they are year to date. They are all positive except for the bottom three. The bottom three are retail, healthcare, and consumer discretionary. Everything else at least positive year to date. And there were 31 out of 44 that were positive. This is a line chart of the S&P 500 for the last 3 years. A move in this chart, up or down, is a 1 week period. So they call it a weekly chart. At the very end of it, and my black arrow shows the general direction, but at the very end of it, you can see that it actually is kind of flattened out or came down a little bit. But that's up from April 7th, where it went down, had a short-term bottom, and that was really followed the announcement of tariffs and so forth. That kind of freaked the markets out, and then from there it rallied back, which is where it is today. I put that on a candlestick chart. So it's still a 3-year chart, still the same time period, but you can see how it moves. A red candle means it tends to start here and go down for the week, and a hollow candlestick means it's doing the opposite. It starts here and goes up. So you can kind of see the periods of red versus hollow. I take this and put it into a daily chart, not a weekly chart, for just the year 2025. So you can see it's a little more micro. So you can see just this year where things have been. Again, the drop that's kind of right in the center of the chart going down, that was, as I said, us getting used to the idea of tariffs that were kind of coming out of nowhere and not knowing the implication to the other country, to our country, or to someone individually. This is relative strength. So this chart shows the strength of the NASDAQ 100 numerator compared to the strength of the S&P 500 denominator. And so it, over that 30-month period of time, has mostly gone up. meaning during that period, the NASDAQ was outperforming the broad market. And then really for the last couple of years, it's gone up and down kind of sideways. The S&P will be stronger for a period than the NASDAQ, and back and forth. But most of the gains occurred during the first year. This chart, also relative strength, takes the S&P 500, breaks apart growth stocks from value stocks. Growth stocks are represented by SPY-G, and value stocks SPY-V. And if it goes up, this represents growth, a higher level of growth in the growth stocks. And if it goes down, it means that value is outperforming. So it's gone up and down quite a bit, particularly in the last couple of years. But right now, it's well above its 20-period moving average. And, we're following this short period of time where growth has outperformed value. This is also relative strength, showing the S&P 500 compared to the IWM, which is the ETF for the Russell 2000 Small Cap Index. So it has mostly gone up, meaning that large cap, S&P 500, has outperformed small cap. Let's say for the last few months, it's gone up and down some, but overall, large cap has outperformed small cap. Long-term government bond, this is not relative strength, this is an absolute chart. So you see the black arrow represents the direction of the TLT, which is the ETF for the long-term government bond, and it has been going down. At the very far right corner, you can see that for the last few weeks, it's actually been moving back up again. But the general direction is a downward direction, and it is still below its 20-period moving average. This is over a 5-year period. Okay, so then I take the same thing, TLT, and I put it since September of 2024. So this would be, what's that, about 8 months or so. You can see for this period of time, it's gone down. And the candlesticks at the far right indicate that for the short period of time, it's been going back up. The dollar is in a period of decline, and that's been true since the beginning of the year. And of course, the dollar is valued against other currencies, so it shows that our currency has, during that period, has weakened against other currencies. Gold has been doing extremely well, still well above its 20-period moving average. It pulled back a little bit last week, as did silver, but generally speaking, it's been moving in an upward direction. I would say that still the trend at this point, as far as I can see, is in an upward direction. Silver, same thing. It has crossed its moving average, 20-period moving average quite a bit, but it is still well above it, and it had a slight pullback at last week as well. Bitcoin has been in a longer term has been going up, but since about November of last year, so this is 8 months or so, it has kind of moved in a sideways direction. It's gone down and back up, but really from its beginning point to ending point in that period of time, not much change. Volatility index, called the VIX, V-I-X, has gone up and down a lot. That's what it does. And if it's moving up, that shows that equities are, or the S&P 500 in general, is volatile. And generally, equities go down. This goes up when equities go down. So, and you see that. It did flatten out this past week, but and it's still below my black line, my arbitrary black line, which is where I consider danger to kind of enter into the market. The gold and silver. So, as I said, they both had a negative week, slightly, just a very small amount down. The gold went down 1.5% from this past Friday from the previous Friday. And silver went down 0.8%. So not much change. Gold, $33.81 per ounce on spot, and silver, $36.03. To that, you add the premium markup for retail. The ratio is 94-1. A monster box, 500 rounds of silver, generic silver, is $18,950. It was slightly above $19,000 last week, so it's come down a little bit. That includes a $1.87 markup retail on top of spot. When you count the spot plus the markup, that brings it to $37.90. And this is courtesy of my son Preston, who is a precious metal dealer. Okay, that's it for today. If you have questions or comments, leave them in the comment section below.